Welcome back to Commerce Veda and good morning. In the previous session on branch accounting, we learned branch debtors method for dependent branches, and also in that we learned cost price method, invoice price method with two examples. Whereas the important method in this particular dependent branch is stock and debtors method. Many students confuses in this method, they do mistakes in this method, but this is actually a very simple method if you learn carefully. Now, what is this stock and debtors method? Here, see, in the first method, which is in branch debtors method, we only prepare two accounts, which is one is branch account and number one is goods sent to branch account. Only these two accounts, wherein we ignored all the internal transactions in the branch account. And internal transactions mean the transactions in the branch with its customers, branch with its employees, whatever it is within the branch we ignored. We only recorded the transactions between branch and head office. For closing balances, we did memorandum debtors, memorandum stock, memorandum cash to identify the closing balances, collections, and we prepared the branch account. Wherein that is possible only when the branch size is small. If it is a small branch, not many transactions in a month, not day-to-day transactions happening in that particular branch. But when the branch size is big and the volume is more, see, in case of larger dependent branches, where transactions happens at branch regularly. It means frequently. So in that case, branch debtors method is very difficult because we prepare generally at the end of the year, wherein we need to understand which method is suitable, that is branch, stock and debtors method. So what is this method is all about? In this method, what we do here is, it is a detailed recording method of branch transactions in the books of head office. Many times in the exam, this method will come because of the very nature of this method, because this is almost like preparing complete set of books of branch in head office. See, here we don't prepare branch account. Instead of branch account, we prepare so many accounts, and mostly prepared accounts are: number one, branch stock account. See, not memorandum, branch stock account. This account is generally prepared at invoice price, and branch stock reserve account. This is for margin, and goods sent to branch account. Right, and branch debtors account, branch cash account, branch expenses account, branch adjustment account. We should know what is branch adjustment account. I'll explain you in detail about each and every account while I am drafting the journal entries. And branch fixed assets account. If at all has purchases some fixed assets for the branch, that is branch fixed asset account. Branch P&L account, branch P&L account, branch petty cash account if it is there. So these are the various accounts, or in some questions there may be another account called branch capital work in progress account, rarely used. This account and this account rarely comes in the questions. Apart from that, branch stock reserve, goods into branch debtors, branch cash, branch expense, branch adjustment, branch P&L, and branch petty cash. These are the regular accounts we should prepare in the books of HO for the transactions at and with the branch. Here, transactions at the branch and transactions with the branch, both shall be prepared. No transaction left untouched, unlike in the first method. Here we record every transaction. That is the reason why what I am saying, this is actually easier than the previous one, because here we need not worry about which transactions I should record in memorandum accounts, which transaction I should record in branch account. But here, your single branch account divided into so many accounts. Now, what is the purpose of these accounts? Your branch adjustment account is actually for gross profit. You know what is the gross profit you earn in branch adjustment account, and your P&L account is actually for net profit. So your P&L account gives you the net profit or net loss, and your adjustment account gives gross profit or gross loss. So these many detailed accounts we prepared in the books of head office for each and every branch, because the transactions are at a large volume. You can't wait till month end to record based on the statement received from the branch, which is not possible here. So we should maintain a detailed account for each and every transaction, so that the accounts are more accurate, more timely. I can say they are real time accounts. So for that, branch stock and debtors method is mostly used in accounting of dependent branches, which are say a larger dependent branches, where the books of the branch are maintained at the head office, but in a detailed format, not in a short form like branch debtors method. Now, we'll see each and every transaction, how it is recorded in stock and debtors method. So, we'll write journal entries in the books of head office. Which method? Stock and debtors method. So the very first journal entry is recording the opening balances. So here no entry. What you should do? Go to branch stock and post to balance brought down for opening stock. Then go to branch stock reserve and post by balance brought down, which is nothing but closing stock reserve, which is on the opening stock. This is at invoice price, and this is the closing stock reserve, the loading on opening stock. This is closing stock reserve of the previous month or previous year, or we can say stock reserve, simply talking about stock reserve on loading on opening stock. The minute you post branch stock opening balance on the debit side, 2 is always on the debit side because it is an asset, and this is credit side as it is a liability. Immediately you should pass one good entry, that is transfer the stock reserve to adjustment account. Here the third step after recording opening stock and opening stock reserve, you should do cancel because it is a credit balance. Now opening stock reserve shall be transferred to adjustment because this profit belongs to current year. So the entry is branch stock reserve account debit to branch adjustment account. So this is opening stock reserve. So now the stock reserve account is closed. Stock reserve account should only have closing balance. Opening balance, the minute you record and immediately you transfer, make it 0. And again at the end of the year you will get the closing balance of stock reserve. This is the first step, recording of opening balances. The first step is record on the debit side of the branch stock account opening stock at invoice price. Record at the credit side of the stock reserve account the loading on the opening stock, and immediately pass an entry to nullify the stock reserve by transferring the stock reserve credit balance to adjustment account. So the entry is branch stock reserve account debit to branch adjustment account. You should start with this particular entries in stock and debtors method. Hope it is clear. Now comes next one is in this record opening debtors in branch debtors account debit side, and record opening cash and petty cash in branch cash and petty cash accounts debit side. So you recorded all the assets of the branch. We think no liabilities at branch because generally it is dependent branch, all the liabilities are met by head office. If there is a liability, record on the liability side, credit side opening balance. This is a liability, stock reserve. We recorded on the credit side and transfer to adjustment. So these are the initial steps to do while preparing the stock and debtors method. Now comes the transactions. Now the second one is current period transactions. One by one, every transaction we learn current period transactions. Number 1, goods sent to branch. I am taking invoice price. So goods sent to branch. The entry here is, I am telling you that different accounts. Goods are coming in. So stock is increasing. So debit stock. Entry is branch stock account debit to goods sent to branch account. This is at which price? Invoice price. Immediately we should reverse the loading. So simply reverse the entry goods sent to branch. This is loading, or we can say profit included in the goods sent to branch to branch adjustment account. So the profit shall not go to stock account again. It shall go to adjustment. This is actually the loading. So see here, branch stock to goods sent to branch. You recorded IP. Stock is always at invoice price. Whereas goods sent to branch is invoice price. You should reverse the loading by debiting it and transfer it to adjustment account. Ultimately, what happened? Your stock is with your invoice price and your adjustment is with your profit. And goods sent to branch is with your cost. See, example if you see here, for this entry, I'll give you an example. Suppose this is branch stock and this is branch adjustment. Guys, observe carefully. And this is goods sent to branch. Now, assume I sent goods costing 100 rupees, added profit 25, so invoice price I sent 125, right? So I record two goods sent to branch as 125 here and by branch as 125 here. So in the branch stock, I debited goods sent to branch. In the goods sent to branch, I credited branch stock. Now, what I'm doing, I'm reversing the profit here to branch adjustment, which is 25, and I'm writing here buy goods sent to branch 25. See the transaction here. Here it is at 125 and the profit is 25. So branch stock is at IP and adjustment is at profit included, and goods sent to branch is at with net. What is the net? 100, which is cost. The entry actually designed in such a way that your stock should show your invoice price. Your branch adjustment should show your loading on the stock, and your goods sent to branch account actually should show what is the cost price. So the first entry, branch stock to goods sent to branch, invoice price, and a reversal of loading immediately. I'll write here as goods sent to branch, not to branch stock, to branch adjustment. So the beauty here is stock is with invoice price, adjustment is with the profit on the credit side, and goods sent to branch is with cost, because invoice price on the credit side and profit on the debit side, the net is the cost which is recorded. So this is the first entry. Understand the entry wherever there is stock movement. Wherever there is stock movement between head office and branch, there is loading. That we should keep it in our mind in every entry. Now, after this, next, goods returned to head office by branch. What is the entry? Returned, right? It came to stock. Now it should move out of the stock. The entry is goods sent to branch account, invoice price of returns to branch stock account. Because when it comes, debit the stock, when it goes, credit the stock. Basic theory. Debit what comes in, credit what goes out. Now, immediately you should reverse the loading in this. The minute I see invoice price, I should know that there is loading in the price. Now, this is the loading should be always through branch adjustment. This profit we are not earning this year because it is returned back to head office. So branch adjustment debit loading to goods sent to branch account. So again here goods sent to branch account returned with invoice price and cancel the profit, net returns is cost, and branch it is invoice price. We should reverse the invoice price because it is no more my stock given back to HO, and goods and adjustment is with reversal of loading. The profit which were taken in the credit side now we are reduced because that I can't sell because I given it back to my head office. So one is for goods sent to branch, other one is for goods return to head office. So these two are the important entries. Whenever goods come from HO to branch, there is a receipt and reversal of loading. Whenever goods return from branch to HO, there is a return and reversal of loading. These are to be coupled. One entry, one transaction, two entries. Entry 1, entry 2. Same, one return transaction, there are two entries. Hope it is clear. Right? Now, the next important thing here is cash sent to branch for expenses. Cash sent to branch for expenses. Cash sent to branch for expenses. So head office sent cash to branch. So cash went to branch cash account. The entry is branch cash account debit to main cash account. We don't prepare main cash because this is HO cash book. But I received the branch received the cash, so you debit the branch cash account. So branch cash account. Then next, fourth one, cash sales at branch. Cash sales at branch. Branch sold the goods for cash. So the entry is, as we know, cash sales is what? Branch cash account, because cash coming in to branch debit to what is gone? Branch stock. Branch cash to branch stock. Then credit sales at branch. Very simple. It is credit sales. Who should give you? Branch debtors account debit to branch stock. We sell the stock, stock is going out. Here cash, branch cash. Here debtors, because it is branch customers. We can say branch customers, branch debtors, whatever it is. So both cash sales and credit sales are recorded. Now, whenever there is credit sales, there may be sales returns from branch customer to branch. So here branch customer return the sales to the branch. So reversal entry is very simple here. Branch stock account debit. It is coming back to the stock to branch debtors. So the entry we reversed. Here we are not reversing the loading because the stock is already, the stock in the stock account is already reversed the loading, and if it is the closing stock, will reverse at the end. Whenever debtor gives to the branch, It is at invoice price, and invoice price don't discuss about loading. Loading we should discuss only when the transaction is between head office and the branch. Right, now seventh one, bad debts, discounts to branch customers. These are the expenses at the branch. So what we should do here is branch expenses, debit, expense always debit. To whom? To branch debtors. Because to the extent debtors should reduce, debtors shall always show a debit balance. However, when returns we remove it, we reverse it, and for bad debts and discounts we credit it. So branch bad debts, discounts we debit to branch expense account. Right, now next, cash collected from branch customers. By branch. So branch collected cash from its customers. Branch collected cash from its customers. The entry is branch cash account debit to branch debtors. Because they gave you cash, reduce debtors and increase the cash. Cash debit, debtors credit, because debtors shows a debit balance. When they gave the money, we should reverse it. So this is a very simple, no transaction are left. See, I recorded cash sales at branch cash to branch stock. I recorded credit sales at branch debtors to branch stock. I recorded returns to branch by the customer. I recorded branch stock to branch debtors. And I recorded bad debts and discount, both are expenses. So branch expense to branch debtors. Because they are non-cash expense. Cash is not going out, but debtors are reduced. So credit the debtors. This expense is non-cash. Right? You sold 100, you should receive 100, but only receiving 80. 20 never come. If 80 received, 20 will come. Closing debtors. But 20 will not come. It is bad debts. We should reverse the debtors. So branch expense to branch debtors. We call it as expense. Whether it is a bad debt or a discount, it is a expense. And cash collected from branch customers by branch, amount coming into the branch cash, and to branch debtors, who is giving branch debtors. So after that, the important thing comes here is some additional transactions, which are branch salaries, rents and other expenses paid by branch. Branch salaries, rents and other expenses paid by branch. This is expense, right? Branch expense account debit to, what is going out here? Cash. So it is a cash expense, branch cash account. So you paid expenses, so expenses to cash. Now in sometimes in some cases, these are the additional transactions shall come. What are the additional transactions? Now branch debtor or branch customer returned goods to head office directly. Generally he should return back to branch, but he returned to head office directly. It means head office received the goods from the branch, right? In this case, it is not coming to branch stock, it is going to head office. If branch debtor returned goods to branch stock to branch debtor. If branch debtor returned goods to branch branch stock coming back to branch and debtors reduced. But here branch debtor returned the goods to head office. So then it should be goods sent to branch because HO received it back as if branch returned it. Goods sent to branch to who gave you? Not the branch, it is branch debtors. If debtor returned to branch, it is simple branch stock to branch debtor. If debtor returned to head office, it should be goods sent to branch debtors. Directly sent to HO. So it is not coming to branch stock. I cannot debit branch stock account. But debtor should get reduced. And the stock is gone to HO. Whenever head office gives you goods, it says branch stock to goods sent to branch and returns goods sent to branch stock. But here branch stock is not credited because it is already credited when you sold debtors to stock. Now debtors is giving back to head office, you write goods sent to branch debtors. Stock you need not touch because stock already reduced for the sales. But the stock is moving to head office. So goods sent to head office to branch debtors. And whenever there is a head office involvement in goods, immediately you should reverse the loading on this returns, which is nothing but branch adjustment account debit to goods sent to branch. Head office should treat as if it is returned from the branch. Right? So adjustment, this is for loading or we can say profit included in the returns. And understood? Here generally it should branch stock to debtors, but it is not going to branch stock, it is going to head office stock. So as if the goods sent to head office. So reverse, goods sent to branch to debtors. And whenever goods sent to branch comes, there is loading. Whenever the head goods sent to branch comes, there is loading. Reverse the loading. Loading to reverse on returns, it is branch adjustment to goods sent to branch because it is returns. Right. Then one more transaction might happen. Branch customer pays cash to head office directly. Branch customer pays cash to head office directly. Now I should write here, it is not coming to branch cash, it is going to HO cash. So I should write main cash book account debit. So I am not disturbing any branch cash book. To who gave you the money? Who gave me the money? Branch debtors. So directly going to head office cash. If the amount paid to branch, it is branch cash to branch debtors. But in this case, cash paid to head office. So main cash book account debit to branch. Here main cash book is nothing but head office cash to branch debtors. Hope it is clear. Now 12. What I did all the entries. Number 1, opening. Number 2, goods sent to branch. Return to head office. Cash sales. Credit sales. Sales returns to branch. To head office by customer. Collection. Bad debts. Discount. All transactions were recorded. And now assume branch customer gives bills receivable to branch. Branch customer bill gives or accepts, I can say, instead of gives we'll write accepts bills receivable to branch. So the entry is simple. Branch bills receivable account asset, right? Debit to who gave you? Branch debtor. Debtor can return the goods. Debtor can give the cash. Debtor can give the bills receivable. Whatever received from debtor, credit debtor, and debit the component cash or stock or the bills receivable, right? And then 13, bills receivable collected. When bills receivable is collected, where the money will come? To your branch cash. So the entry is branch cash account debit to branch bills receivable. In fact, it is cash to debtors. In between, he gave bill and bill is encashed. So these are the important transactions we should always keep in mind. Now that everything is done, sales, returns, bills receivable, right? Expenses, I think expenses also I recorded. Where is expenses recording? Yes, branch salaries, branch rent, branch expenses, branch expense to branch. So all transactions are recorded. Now it is the time to see how do we do the other parts. Number one, in this next, transfer the branch expenses to branch P&L. So whatever the branch expense, ultimately the expense must be transferred to P&L. The entry will be branch P&L account debit to branch expense. Expenses should be zero. All nominal account balances must be transferred to P&L. That's the thumb rule. So branch P&L to branch expense. Expense cancel. Then what you should do? Identify closing stock, that is balance the branch stock account. So you get the closing stock, you should write by balance carried down in branch stock account. No entry here. I didn't know guys. We should identify the closing stock because stock received, returned, sold, right? Received, returned, sold, and the balance is closing stock. Yes, so the closing stock should be on the credit side. By balance carried down. Whenever there is closing stock at invoice price, you need to identify, find out the loading in closing stock. Loading is nothing but profit. Loading in closing stock, and you recognize the stock reserve. How do you recognize the stock reserve here? Closing stock reserve, which is nothing but opening stock reserve. What we did? Stock reserve to adjustment. Stock reserve account debit to branch adjustment. Opening. Closing it is branch adjustment account debit to branch stock reserve. Again, stock reserve account comes with a closing balance. So opening, what we did, stock reserve to adjustment. Closing stock reserve is only on closing stock. It is branch adjustment to branch stock reserve. So this is what we identified, branch adjustment to branch stock reserve. Clear? Now 16th one. Identify the branch debtors closing balance and post credit side of debtors account as by balance carried down. That's it. So we close the stock account. We close the debtors account. Now the next thing what we should do, we close the expense account also. Expense account we closed by transferring to P&L. Stock account we closed, balance brought down and reverse the stock reserve. Adjustment to stock reserve. Debtors accounts we closed, only balance brought down. Then 16, next one, identify the branch cash closing balance. But before that, pass the entry for cash sent to head office. Cash sent to head office. So what is the entry for cash sent to head office? Main cash account debit, because head office cash account debit, because amount going to head office, where it is going from? Branch cash account. And then for closing cash, you should write credit side of branch cash by balance carried down. This is the closing cash balance. Before closing the cash book, we should see how much amount sent to head office. So the entry is HO cash book debit, because amount going to head office cash book. From where it is going? Branch cash book. So when you receive the cash, the entry is branch cash to main cash. When you send back the money, it is main cash to branch cash, right? So we closed even cash. We closed cash, we closed stock, we closed debtors, we closed expenses, and close the branch stock reserve account to balance carried down, because stock reserve is having a credit balance. So post on the debit side saying that to balance brought down, which is by balance carried down for the next year. Credit the balance. So stock reserve account also closed. Then after this, stock account closed, debtors closed, expense closed, right? Cash closed, cash also closed, right? Many accounts are closed one by one, 1, 2, 3, 4. Now comes here is identify the balance in branch adjustment account. This is nothing but the loading account. I can say all the loading pass through adjustment account only. So all the loading in the stock is in the adjustment account. Opening loading on the debit credit side, closing loading on the debit side, goods received from branch on the credit side, goods sent back to the head office, goods received from HO, goods sent to branch is on the credit side, goods sent back to HO on the debit side. So we do every loading through branch adjustment account. Whenever there is loading goods sent to branch, the opposite account is always branch adjustment. Whenever there is stock reserve, the opposite account is always branch adjustment. It's for loading. Now the balance, there is a chances that the balance may be two balances. What are those? If credit side greater than debit side, this is profit. And if debit side greater than credit side, it is loss. Whether it is gross profit or gross loss, I will say gross. So branch adjustment, either credit balance or debit balance. If credits are more, then it is profit. If debits are more, then it is loss. Loss or profit shall be transferred to P&L. If it is profit, what should do? Branch adjustment account debit to branch P&L account. So credit side are more credit balance, now debited. So adjustment account debit to P&L. And if it is loss, it is branch P&L account debit to branch adjustment account. So if credits are more than debits, it's a gross profit. Whether it is a gross profit or a gross loss, ultimately must be transferred to P&L. So when we are transferring to P&L profit, adjustment to P&L, it should come on the credit side of the P&L. If we are transferring the loss to P&L, it is P&L to adjustment, because loss should come on to the debit side of the P&L. So adjustment account is also closed, right? So how many accounts are closed? Stock account closed, debtors account closed, cash account closed, expense account closed, reserve account closed. Now adjustment account is also closed, right? All accounts are closed. Now comes identify the balance in branch P&L account. Again, there are two chances. P&L also. If credit side greater than debit side, that is net profit. And if debit side greater than credit side, it is net loss. Loss or profit ultimately shall be transferred to general P&L, HOP&L. If it is profit, then we should write branch P&L account debit to general P&L account. And if it is loss, it is general P&L account debit to branch P&L. With this, branch P&L is also closed, right? So all accounts are closed except one account, which is, and again repeating, after transferring the expense to P&L and after transferring the expense to P&L and after transferring the adjustment to P&L, we should close the P&L account, and the P&L account either having a credit balance or having a debit balance. If it is credit balance, profit. So branch P&L to general P&L. If it is debit balance, loss. Then general P&L to branch P&L. With this, branch P&L also closed. And one more account is there, which is goods sent to branch account. Identify the balance, always the credit balance, goods sent to branch, because goods received from the head office. So it should be like goods sent to branch account debit to trading account. Whose trading account? Head office trading account, right? With this, your solution is clear. However, in some cases, before closing the adjustment, before closing the P&L, there will be some special transactions. Example, special items. Say abnormal loss of stock. abnormal loss of stock or normal loss of stock. It means in the stock, the closing balance should be 100, but it's only 90. So 10 is loss. If it is abnormal loss, what we should do? Abnormal loss, what we should do here is, first find out the cost price and profit. Stock is always invoice price. You should divide between cost price and profit. Suppose say abnormal loss 240 and assume in this invoice price 200 is cost and 40 is profit included. Now what shall I do here is, I should debit branch adjustment account for profit portion and I should also debit branch P&L account for the cost portion, and I should credit what is lost? Stock. I should credit stock for the invoice price. This is loading, this is cost, this is invoice price. And then only you should close the adjustment account and P&L account. You should not close adjustment and P&L before this transaction, because this transaction reduces the gross profit and this transaction reduces the net profit also. Special transaction, if at all there is abnormal loss, first pass this entry, then close the adjustment account, then close the stock account, then close the P&L account, because three accounts are disturbed. Stock reduced at invoice price, adjustment reduced at profit, and P&L reduced at cost. And if it is normal loss, don't take it to P&L, directly full invoice price. You can write branch adjustment account invoice price to branch stock. If sum is silent on which type of a loss, always assume abnormal loss. If sum is silent on type of loss, always assume abnormal loss and split between adjustment and P&L. This special transaction is where you need to be very cautious before closing. Whenever there is abnormal loss or normal loss, don't close stock account before passing the entry. Don't close adjustment and P&L account before passing the entry. So with this, the theory part of your branch stock account is completed. We closed all accounts, we got gross profit, we got net profit. This is about detailed accounting of dependent branches using stock and debtors method. Hope you guys understood the theoretical portion of it. Let us do a sum in the next session, a detailed sum on stock and debtors method, including abnormal loss, so that you will understand, you can relate this theory with that practical question. Signing off for now. Bye for now.